As we wind down 2021, which has by almost all measurements been one of the craziest years ever in the US housing market, it is vitally important for investors to stay on top of what is going on in the housing market so you can make the best investing decisions possible. What's going on, everyone? I'm Dave Meyer, Vice President of Data and Analytics here at BiggerPockets. And today I am going to walk you through all of the most recent data about the housing market so you can stay informed and make investing decisions with the most relevant and recent data possible. Before we jump into any of that, I ask that you do please give this video a thumbs up if you like this type of content and subscribe to the BiggerPockets YouTube channel. And I always do appreciate if you follow me on the Data Deli on Instagram. All right, so we're going to start with housing prices. That's the big top line number everyone wants to know. So let's start there. And we have two charts for you. It's actually the same data. It's just the median house price in the US over time. And we have two charts. The one on the left goes back a little farther to 2012. The one on the right goes to 2016, starts at 2016. And I just want to point out that in these two charts and a lot of the other charts I'm going to be showing you, we actually have two different data sets within each one. And what they show is the blue bars are the actual median home price and the orange line is seasonally adjusted. And that's important to note because the housing market is extremely seasonal when it comes to data. And typically that means that over the summer, more homes sell, they sell at higher prices. There's just a lot more activity in the housing market. Over the winter, starting around now, actually starting a little earlier, September, usually we start to see things calm down. So what data analysts and people who keep this kind of data do is they adjust it seasonally so you can see the trends over time. It's super helpful to view, and that's why we're going to be looking mostly at seasonally adjusted data today, which you see here on this orange line. And so the first thing I wanted to note and why I took this zoomed out view for the first thing here is to show you that there has been a positive trend in home prices going back to basically 2011 and the Great Recession, fallout of that. And what we see starting at the pandemic is a big shift in trend. So when you see a line that stays still, or not still, but sort of follows the same trajectory over a long period of time, like you see here, that's pretty normal. That's what we would expect in the housing market, appreciating 2 to 4% every year. Now, what happened when the pandemic started is you could see the trajectory, or what we call trend, has changed completely and is now on this really aggressive slope. And so a lot of people are concerned about that because they see this and they think logically, oh no, we're in another bubble, things are getting really bad. But we'll talk all about that. I don't personally think that things are getting bad anytime soon, and I'll show you a little bit why. So first of all, a lot of people I've talked to say, look, the median home price, it's already starting to go down. And that is sort of true. Like if you look up here, you can see that this trend starts downwards. But that goes back to exactly what I just said. This is a seasonal decline in the median home price in the United States. It is not reflective of an actual decrease in prices. So if you look a little bit closer, every single year going back in time, we see the same pattern, right? It goes up, it goes down, it goes up, it goes down, but it's trending upward. But each year, like I said earlier, the seasonal pattern where in September, October, prices start to decline. And so you can see that is expected behavior right now. So although we're not hitting all-time highs for the median home price in the US right now, we are hitting all-time highs for September. We are hitting all-time highs for October. And that's what's really important here because you have to factor in seasonality when you're looking at the housing market. You can actually expect median home price to decline in a non-seasonally adjusted way through January. January is usually when it starts to bottom out and then things start to come back. And unless something really wonky and unexpected happens, you should start to see new all-time highs in non-seasonally adjusted ways around May or June of next year. So nothing has really changed in terms of home prices. They're still continuing to go up. And even though you see the median home price start to go down in the end of Q3 and into Q4 of 2021, that is expected, and things are still going up in a seasonally adjusted manner, which is what really matters here. So that's the main thing. And let's look a little bit behind the scenes at what is going on and is driving these prices up. So the next thing I want to look at is home sales. So this is super important because home sales is essentially a measurement of demand. You want to know how many people want to buy houses. And this is a particularly important question right now because prices have gone through the roof. In 2021, we've seen 16, 18, 21% year over year price gains across the country, mostly in major metros. Smaller cities are growing, everything is growing. And so the question is, do people still want to buy homes at these increased prices? And the answer is a resounding yes. Look at the seasonally adjusted, again, the orange line here. You can see that things were going up in a very stable, typical way from 2012 up through 2019. That's designated by this orange line here. Now, what happened in 2020 was just crazy for everything. So you saw this crazy decrease, obviously, around the first shelter in place orders. And then things spiked up, sort of a whiplash, right? They were down so far that they went up above their normal line. But now we can continue this line and see that we're actually increasing the number of sales, home sales in the US. And so there's this narrative that there's no inventory on the market. And we'll talk about that in a minute. But that is not necessarily true. Clearly, enough homes are being sold so that more homes are being sold than pre-pandemic. Look at this. We just hit over 6 million annualized rate for home sales, which is a really high number for home sales. And that is buoyed by a lot of the millennial demand that I've talked about in previous shows. But as you can see, home sales are actually up. So that means demand, even with prices as high as they are, is still really high. I'll show you quickly where we are. And it's important to note that it is a little bit lower than last year. So we're now going to look at year over year numbers. And you can see that it never really changed that much going back about a decade. You didn't see a lot of changes in demand. But now you've seen this year over year uptick in 2020 and 2021. And now we are sort of coming back down. So we're now actually seeing home sales for September was below where it was a year ago, which is something to note. And if that trend continues, that will be something that will be really important. But I honestly don't think it's going to, because it's actually still above where we were in 2019. So home sales were down year over year, but up over 2019. And so they are still up from pre-pandemic levels. And we've just seen huge amounts of home buying over the last couple of months. And I just don't think that's going to come down, but it's definitely something that we're going to keep an eye on over the next couple of months. Okay, so next we're going to go into listings. And this is a reflection of inventory. And there's all sorts of ways that you can measure inventory. And this has been a real hot button issue in the housing market over the last couple of months because inventory is seemingly really low. Like if you're a real estate agent and you want to go and show your clients a bunch of properties, there are not a lot of properties to go show. And that makes people think that inventory is extremely low. And that's not necessarily true because a lot of properties are coming online. Otherwise, how would we have 6 million home sales a year? But they're coming online and just going really quickly. So the number of listings that are active every month are probably lower, but that's just because they're coming on and selling so quickly. So what I like to look at right now in this type of environment as a measure of inventory is new listings, just how many new properties are put up for sale in a given month. And what you'll see here, again, is a similar pattern to the other data that we've looked at so far, which is that things started going up post-Great Recession. Oops, got to get my pen back. Post-Great Recession, and then they were just flat, right? Basically completely flat for quite a while. And then we had this wonkiness for the last year and a half, and now we're settling in actually at a higher rate. So people think that inventory is down, but new listings are actually up from where they were pre-pandemic. Now I'll switch over again to this year over year chart. And so we'll see a similar pattern for home sales. And that makes a lot of sense that new listings and home sales data would correlate to each other. But what you're seeing here is that we are back around even We're actually lower than we were last year, but again, we are above where we were in 2019. So new listings are at pre-pandemic levels. So when you hear the idea that inventory is down, that's not necessarily true. We are seeing huge, very healthy numbers of home sales right now. And that is because more new listings are coming online. So that is a really important thing to note. And it will be important to see how that trends over time, because that's going to make a big difference in the housing market. Now, like I said, inventory isn't necessarily low. It's actually doing quite well. I think it's probably pretty healthy right now. But market competition, that is what's making it seem like inventory is so low. This market competition, the sense that you can't even bid on a house before it's gone, or you go and you want to look at 10 properties and there's only 5 for sale in your target market, that is because of market competition. And that is still super high, but I think it's great news that it's starting to come back down. And I'm going to show you 2 different data sets that reflect this. And the first is the sale to list ratio. And that is basically a ratio of what a property is listed for and what it actually sells for. You would expect, in a perfectly balanced market, it would be 100%. You would list it and you would sell it for exactly what it's listed. If you are in a seller's market, you would expect the ratio to be over 100%. Basically, people are bidding and over asking, and sellers are accepting bids over asking. And so we were at this, again, long upward trend. We were on a very stable trend in the housing market for a long time, and COVID has really upset all of that. But let's look at where we're at. So after the pandemic, we saw a huge uptick up to about 102.5%, 103%, and things are still above 100. So it's definitely still a seller's market, but look, it is starting to come back down. And I think this is really good news for the housing market, which I'll just talk about in a second. But I want to first show you the other measurement of market competition, which is days on market. Again, from 2012 up until about the pandemic, we saw this trajectory that was very stable. Again, you see this seasonality. That's what things are going up and down. But if you look through the seasonality, you can see that this trend is gradual and downward. But right before the pandemic, let's pick January 2020, we saw that the average days on market was about 40 days. Then this past summer, June 2021, we saw this bottom out down here at about 16 days. So that is less than half. That means that houses were being put on the market and sold in about 16 days, which is crazy. You can see back in 2012, 2013, you could expect 60 or 70 days, 2 or 3 months to sell a house. Now, about 2 weeks in June, that was the peak. Now we're actually getting closer to about 3 weeks, about 21 days on market. So that is another reflection that the housing market is starting to cool down, which in my opinion is actually really good news. Now, if you've watched my video about 2022 predictions last month, 2 weeks ago, you'll know that I think that the housing market is going to go up next year. And I base that on all sorts of things, mostly supply, demand, and interest rates. But I do think it's super important that the housing market starts to return to a more balanced market. I would personally like to see home price appreciation in the 5 to 10% range. I think it might be a little higher. I'm thinking about 7 to 11% next year. But I think it's super important to affordability and the long-term stability of the housing market, and for just the general quality of life of Americans, that the housing market returns to much more stable levels of growth. And so when I see these days on market start to tick back up, I see the sale to list ratio start to tick back down, that indicates to me good news. I don't think that's going to cause a crash. These things are happening gradually, but I do think it could help us return to a much more stable, healthy, and sustainable housing market in 2022. All right, that is it for me this week. I hope all this data and information about the state of the housing market right now is helpful to you. If you want more information about how to invest in real estate, please visit BiggerPockets.com, and you can always follow me at The Data Deli on Instagram. Thanks so much for watching, and I will see you all next week.